You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster GIOVINAZZI from OptionPit.com. The Option Block is brought to you by TradeStation. TradeStation has been giving options traders an edge for over 20 years. Their suite of simple yet powerful analysis tools and lightning-fast order execution can be accessed as an app on your phone, web browser, or computer. Education is in TradeStation's DNA, offering help for traders of all levels. And now, TradeStation is commission-free for equities and options trades. For more information, visit tradestation.com/optionsinsider. And now, get ready to hit the Option Block.
All right, everybody. That rockin' tune means it is Thursday. It is noon Central, 1 p.m. Eastern. It is time, once again, for the Option Block. I will be your guide for this journey. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from this fine network upon which you are listening to this fun program. At least we hope it's fun. Right now, glad to see so many of you are taking advantage of what the network has to offer these days. Remember, if you like what you hear, leave those questions. So first off, send the questions in to us, but also leave a review on your platform of choice. That helps the influx of new listeners continue to grow. And a lot of people need this kind of content these days, particularly everyone stuck at home, maybe a little bit worried, maybe a little scared to look out their window. I can't really blame them. Then we'll help talk them off the ledge, keep them informed, keep them educated. At the very least, they will not be wanting for options and indeed financial content. So keep those reviews coming because it keeps the new folks coming in. And we do love to see those every month here. You guys have been flocking in to the network more every month, which is great to see. So I'm glad to see you guys are getting some value out of it in these crazy, these just insane times we're all living through together. And joining me to help me parse this madness of a market, first off, let's go out to the quiet, sleepy town known as St. Charles. Thank goodness they have the weather shield. Hopefully they can activate it against people and other foreign invaders these days as well. Talking about St. Charles, where I'm joined once again by good old Uncle Mike TOSAW himself, a.k.a. the Permabull, a.k.a. Mr. Optimistic. Mr. Uncle Mike from St. Charles Wealth Management, how go things in your neck of the woods today, sir?
All's well. The sun is shining, 80 degrees, and might get to put the boat in today. The river might be low enough.
There you go. Dare to dream such things as putting the boat in the river. Speaking of boats, I do believe the boats are lurking by him as well because the Clam Pirates are back. No civil unrest is going to stop the Clam Pirates. Yes, I'm talking about the Rock Lobster himself, Mr. Andrew GIOVINAZZI from OptionPit.com by way of Carmen Line Capital. Mr. Rock Lobster, welcome back to the program. How goes the clam piracy, sir?
It's well right now. The tide's in, so there's no clam piracy. But this morning, bright and early, they're in there taking the clams. Actually, I shouldn't even call them clam pirates. They do have lease rights to all of the low water tidal flats to get those clams. So if you're in Chicago and you ever have steamers and you wonder where they come from, they're coming from places like here in Maine, where they work for a living. But I'll tell you what, you can make $200 pretty fast. I've never seen those guys can fill up a bushel like nobody's business. So they come in, grab their clams, and split. But things, like I said, for me, things don't change very much. I just hope I liked it better when the world was boring, to be honest. There's way too much excitement out, past the driveway.
Certainly is a little bit of excitement, especially around these parts. But I'm glad to see your guys are licensed clam pirates. They're more like clam privateers then. They're authorized clam pirates, like Francis Drake. They're out there authorized piracy. Let's see what kind of piracy we can get up to as we head on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
I've always loved that term, privateer. I think it just sounds cool. About all the fun of being a pirate, but you're official, you're licensed. So it's the best of both worlds, and you get a cool name, like a privateer. What a great job to put in your LinkedIn description. What's your job, privateer? Don't see those as often anymore. What we are seeing also, not quite as often these days, but we are finally seeing it here again, is the market actually showing a little bit of red. And I emphasize a little bit because we're not seeing a ton. You would never know, like you said, that the world is in complete upheaval. The riots and protests we talked about over there on the earlier show have now spread around the globe. Not so much on the riot side, more protesting around the globe. Thankful to see. I think Paris had some rioting there as well, but not so much in the chaos and looting like we have seen around here in the domestic U.S. But yeah, the market's maybe reflecting that, also probably weighing on things like maybe these remdesivir trials, maybe not as exciting as some people were hoping. So a lot of things are combining to weigh on the markets. Obviously, the economic numbers are by no means good, and the looting and civil unrest in most major market centers not exactly helping the prospect of the potential for opening again. I mean, we were planning, in fact, we did just quote-unquote reopen here in Chicago just, I think, a couple days ago, and yet, where can you go, really? In fact, literally outside this door of this studio right now, as I speak, as I'm saying these words to you listeners, there are National Guard troops with Humvees and automatic weapons and bulletproof vests standing right outside, yards away from as I'm saying these words to you. So the notion of reopening, most of the bridges are still up. There's a couple that are down now, but most of them are still up. So the notion of Chicago reopening and the economy reopening and embracing these things, and most of the small businesses that are down here have been looted and destroyed. So the notion of this great reopening that everyone was kind of embracing, and the market certainly was, doesn't seem like it can come to pass, at least in areas like this. Out by the clam pirates, or I should say the clam privateers. That's what I'm calling them now. It just sounds much cooler. Still, maybe they can reopen out there, but down around here, not so much out here. So the market may be reacting to that and a bunch of other things. Could be a little bit of profit taking, obviously, too, because we have been on a protracted rally. In fact, speaking of this rally, some folks sent this in. I believe this is from OPALESQUE, this analysis. They did an interesting breakdown of the velocity of the recent sell-offs. Not a term we use a lot. I mean, we talk about the VVIX, which is the velocity of volatility. So we do get to the velocity angle, not so much from the overall valuation, or I should say loss thereof perspective. And they were crunching the numbers here. The time they did this, I believe this was earlier this week, they said the S&P had rallied 41% in 10 weeks. That's greater in percent terms than the 36% plunge that took place in the 5 weeks before that. And some of the, of course, obviously amidst some of the worst economic data we've seen. They give a little bit of comparison for analysis there. The dot-com crash back in March of 2000, that kicked off in March of 2000, that big sell-off, and lasted for 929 days. Equities losing about almost half, about 48.6% net total. That corresponds to their analysis, about 1.6% average loss per month. Now you get a little bit sooner, a little bit closer here. You get to the financial crisis back in 2007, 2008. That went on for 517 days, and they lost 55.2%. That gets you a little bit steeper average loss per month of 3.2%, so roughly twice as fast. Now we get to where we are now with this coronavirus meltdown. All of this happened in about a month. That's about 20x the velocity of the dot-com crash and about 10 times the rate of the financial crisis. So just put a little bit of that in some perspective out there. Not a frame of reference we look at the market through that often, but interesting to do so nonetheless. That the market's changed a lot over the last decade or so, certainly, and a lot of that is playing out here in this recent sell-off, and then indeed just as rapid almost rally here to the upside. Coming into showtime, we saw our old friend VIX Cash a little bit north of 25, about 25 and a quarter. Looking pretty good for the Rock Lobster's prognostication for the crystal ball tomorrow. But again, we know 24 hours is an eternity in the vol space, so anything could happen. But that puts it off about 3.5 handles from where it was last show. So that stubborn firmness we were talking about on the option block and indeed on vol views last week, how it seemed like VIX refused to budge too far from 30. Maybe some of that has been broken. They're about almost 5 handles away from that 30 handle right now. VVIX, which is the velocity of vol, at about a 108, almost 109. That puts it actually up a little bit, up about 1.5 handles from last show. So vol is moving. Again, it moved almost 5 handles away from where it was. VXX down yet again, threatening the 30 handle now. Not too long ago, we were talking about the 35 handle and our friend out there who had 100,000 puts on the July 35 strike and kept bouncing off of it. And it seemed like that maybe that was a bridge too far. Now we're well south of that, down 3 handles. Of course, he took those puts off. He put on a put spread, but he took those puts off, which kind of reflects, again, just how difficult it is sometimes to just make money out in VXX the old-fashioned way of setting it and forgetting it with those downside puts. Things are pretty pricey out there. Let's go back around the horn. We're talking about VXX puts and Clam privateers, so let's start in the land of the Rock Lobster. I like it. It just brings a smile to my face to say Clam privateers, Mr. Rock Lobster. What is going on in your neck of the woods as you're battling it out with these newly minted and licensed Clam privateers, sir?
So of all, the Clam privateers, I'm glad they're out there because, hey, that means people want to buy clams. Actually, there's not a lot of lobster. There's a lot less lobster traps this year just because there's nowhere for the lobsters to go. Restaurants aren't buying them because they're not open. So there's some sadness there. At least the Maine economy has actually gotten hit quite hard by all this. Not like anybody else has, but very dependent on summer tourism, stuff like that. So anytime we can open up, that'd be great. But now that I'm off my soapbox, as far as vol goes, a couple of interesting things. So Volman did post pretty what we'll just call expensive skew about a month out. There was like an ascending bid for the 25 Delta put. Relative to the at the money going out for about a month. I don't know what's significant about the month, the 30 days, apart from the fact that, as we kind of get past, is that the new infection? I think it might be COVID related that, okay, everybody's going to get reinfected. It's going to be really bad. I'm not sure, but the bid for vol is there. Also, the bid for vol is in surprisingly right now. If you look at things like the July contract is quite expensive, and as I look at it, I'm like, oh my gosh, wow! The July contract, it was relative to where cash was. It's like $3.50 over. It's a pretty pricey premium. Pretty pricey premium. Say that 3 times fast. Besides the October hanging around at 31 because of the election, and again, they think that contract, they're expecting a bid for that contract to develop like a pretty solid bid for November vol over the October vol. I don't know. I guess, I would assume that the polls and things will go down the wire. Who knows? But anyway, that bid is not going away. But I would say the July contract right now relative to cash is pretty darn expensive at this level. Normally, we have seen premiums like this when VIX is 12 and the 45 days out, that future might be $3, which I think is pretty expensive when VIX is 12. So like the cash value is there is a bid for the back month forward vol is higher. And short-term vol is much lower, so it creates the kink in the curve. But that also means that July vol has a fairly substantial way to fall. Realized vol now is around 15%, so pretty big vol premium. So I'm talking. I did add some like short VXX type things to try to take advantage of July today. I already had some on, but add a little more. And we'll see what happens. But I think that's very expensive. The only thing I could tell really is it's COVID related. That also could be July when, people come off of unemployment or some of those numbers come back. And then we'll see how many people are actually going back to work and eating at restaurants and trying to get back to some sort of normal life. So I'm not sure if that premium goes away anytime soon, but it has been stubborn and persistent as VIX cash drops. So it is leaving a bit of an opportunity in that part of the cycle. So that, I think, is the most interesting thing. And then after that, the vol is extremely flat, which you'd more expect when VIX were still in zone 4. However, today, for the first time since this whole COVID thing started, I will tell you how close we got to being out of zone 4, the danger zone. I think we got very close to. Let me get my ticker up here, because I saw us trading like 24.30 something. I just want to get the low tick for VIX today. We didn't get quite below 24 vol, but we got darn close, 24.37. So in order for vol to go lower, it needs to go lower. So I would say today was one of a substantial drop in vol overall. The market's selling off a little bit. It's going up for 10 straight days or 2 straight weeks or something like that. But there was a pretty substantial drop in vol, and we'll see how long that lasts. But overall market, all the candles are getting smaller, everything wise for SPY. SPX is getting a little less. So, maybe things slow down a little bit here and we get some sort of return to normalcy. But 3,100, hey, what a shock. It's proven a little sticky at this point. So, but I still think, at this point we've recovered so much that it's I think 3,100 might be our wait and see level. At least vol's kind of saying that, the way it's been sort of settling down here around this level. So anyway, that's kind of my vol take for the day.
I like it. I like anytime Vol Man wants to make an appearance on the show, he is welcome. You got to start drawing him with a sweet little pirate hat, though. I think that would add an element to the Vol Man's presence. Let's head on out now to that sleepy hamlet known as St. Charles. Mr. Uncle Mike, sir, what is catching your eye on the first non-Uncle Mike day in quite some time, sir?
Yeah, no kidding. Well, first off, please pray that we continue to have the sleepy hamlet here, because we are scheduled to have nonviolent protests this weekend. So hopefully they remain nonviolent. So we'll see.
Well, if you need some National Guard troops, I know a guy. I can send some your way.
We'd appreciate it. We might need some help. But no, in the Tri-City area around here, they had a protest in Batavia yesterday. It was very peaceful, and it was a godsend, quite frankly. So hopefully that continues when it comes to St. Charles this weekend. But anyway, in terms of what's catching my eye right now, silver has also pulled back fairly significantly for silver, off roughly 3% from its highs a couple days ago, back down to the 16.5 level in the SLV contract. And so I think that one thing that's been interesting with silver, it's definitely underperformed gold over the course of the last year or so. No question about that. But what'll be interesting is that as we go back to work, silver is more of yes, it is a precious metal, but it does have more use factors instead of just being pretty like what gold is pretty much. And so what'll be interesting is that if the gap between the performance of silver and gold can become closer based on performance, that could be pretty good for the silver bulls out there. Now, with that, within my collar strategy, I have 2 collars going, one long 2-year collar that still goes out to January of 2021 that Mark makes fun of me for all the time for promising many adjustments and many things, but delivering on none in terms of what I've actually done with it. But another collar that I have, it's a rather tight collar on silver. I started this out probably about 2 years ago when SLV was in the mid-18s, and silver is in the mid-16s right now. And what's exciting about this is that if silver can stay above 16.5 till the end of June, with all of the adjustments and getting in and getting out with which I have done, which really hasn't been that much, this trade will actually be profitable, even though it's down almost 20%. Since we got into it. And that can be kind of the magic of the collar. But the bottom line to it is just basically take profits on the puts and roll down as it goes down and continue to wait to be called out. And so this will probably be the end of this collar. This is the one that one of these is I was hoping to give more details on the show, but the way with which it's moved, I think I've made maybe 5 or 6 trades in 2 years on it, and this might be coming to an end. But nonetheless, I will keep everybody posted as to where that is going. Another mover and shaker on the day-to-day, we have the financials, XLF. XLF doesn't care that it's a slightly down day. The financials are definitely going up. We're at the close to approaching the 25 level with XLF, and it just seems that there's a little bit of a rotation with the bulls in that a lot of the fangs are not the favored names anymore. But now it appears that people are looking more towards the financials anyway, in terms of a spot with which you have the ability to get some type of a bullish return. Now, will that continue? Who knows? But that's definitely kind of been a trend recently. XLE is back above 40 right now, in that my beloved XLE that I've had people hold just as kind of like a natural, not natural gas hedge, but just kind of as a hedge against gasoline prices. I figured the only way that I could get burned on this is if gas prices go higher, then they'll pay more at the pump, but clients would make money on XLE. If gas prices go down, then they'd pay less at the pump. But with that, the price of XLE would go down. Now, the only way that I could possibly get burned on this is if we had a global pandemic and nobody was driving anymore. So thankfully, it was a small enough position in most clients' portfolios, and still is. I still own it personally, to where it really hasn't hurt too badly. But nonetheless, that's kind of where we stand on the world of XLE. Another thing that's kind of catching my eye right now that I'm keeping an eye on would be that of IBB. IBB is an ETF that tracks biotech. And so that one just naturally with the market coming back up has done really well. And it's also done fairly well over the course of the last 3 years. It's easily a 3-year high. But what I like about this one is that it is starting to channel a little bit at the high levels, and it's at the lower end of a channel. So that's another one that's catching my eye. I have been selling puts on that one over the course of the last few years now, as well as just owning the underlying for some of my clients. And so that is what we have going on. That's what's catching my eye right now. I agree with Andrew. 3,100 is kind of a sticky level at this point, and we'll see if we can break the 3,100 glue in the coming days.
We shall see. Let's also see what the market is up to out there in terms of what they're actually trading. A pretty active day out there. Maybe not in the major indices, but definitely out there in the most active. We'll get to that in a second. I actually forgot to mention at the top of the show some good news for a long-standing friend of the network out there. In fact, in honor of him, we'll make all of this next set of data courtesy of the Flowmaster and Trade Alert, because Trade Alert, now part of the ever-expanding SIBO empire. Yes, congratulations to the Flowmaster and the team over there. They sold it to the SIBO. I've been ribbing him about that for months now. When are you going to sell it to the SIBO? It seemed like it was obvious once they bought FT options, and sure enough, they did. So congratulations to him. We should also that means we're going to enjoy Trade Alert now while we have access to it, because if past his prologue, once SIBO buys a firm that's a long-standing friend of the network, they tend to block out our access. So we'll enjoy our last days of access to Trade Alert here as we fire up some of what's going on out here. Let's look at VIX land first. 185,000 contracts on the tape as of a few minutes ago. So not a terribly robust day. The ADV is back up to about 355, ticked up a little bit out there. A SPY at about 2.6 or so million. The ADV about 4.7 out there. So decent paper out there. The S, 536,000. The ADV, as we said before, a very anemic 1.07 million. The Qs, 527,000 contracts. The ADV, about 800K. And the Russell, at least the IWM flavor, at 336,000. 621 is the ADV out there. We know small caps have been lighting it up. Speaking of lighting it up, this is one of the most active top 10s I've seen out here in the single names in quite some time. It cost you 230,000 contracts to break into the top 10 today, listeners. So single names are lighting it up. And it's not all the names you might expect. It's not the usual suspects. They're still in there, but perhaps not taking the top spots like they normally are. Number 10, AMD, 230,000 contracts. Number 9, United Airlines at 248,000. Number 8, MGM. Don't see that one in the top 10 too often. 256,000 contracts. Number 7, Delta, getting a bit of a theme out here. 281,000 contracts. Number 6, Apple has fallen all the way down to number 6. When was the last time we saw that? It's been quite some time. At a paltry 283,000 contracts. Number 5, Tesla. These are usually number 1, number 2, down to number 5. So neither of them even really breaking, except for Tesla, barely skating into the top 5 there. 290,000 contracts for Tesla. Number 4, Bank of America, 307,000 contracts. Number 3, NIO. They have Chinese electric car fame / infamy at 369,000 contracts. So they're lighting it up. Number 2, our friends across the street there, maybe bolstered by the presence of the National Guard. Maybe that's why the National Guard is here, to safeguard Boeing. Either way, 607,000 contracts on the tape for them. That means number 1, American Airlines, 626,000 contracts on the tape today. So airlines today, listeners, just lighting up the tape. We got American number 1. We've got Delta number 7 and United number 9 there. So 3 of the top 10 coming on the airlines sector. Let's look out here really quickly, too. We have the numbers from our friends over there at OCC for May. May was a kind of a popping off month, as you might expect out there. Total volume up 17.3% from a year ago. It was about 545.2 million contracts. That puts their year-to-date ADV is 27.7 million contracts. That's pretty substantial. That's up 41% from this time last year. So that's a pretty strong ADV out there. Let's break it down a little bit further. Let's get into the listed options. That's where we hang our hat. Remember, OCC clears a bunch of stuff. Let's see. That listed options volume, 541.8 million. That's up about 19% from this time last year. Equity options, let's drill down a little bit farther. That was 511.6 million contracts, up 26% from May of last year. That number overall includes cleared ETF options. If we break those out on their own, that's about 200.2 million. That's a 14% increase from last year. If we break out even further, let's break out some index options. That gets about 30.2 million. That's a 39.5% increase. Let's see. Futures was 3.3 million contracts total. That's a 62.6% decrease. That's one of the weird things that I haven't really been able to wrap my head around why that is. I know some products have been taken off the board, so there's less demand. XIV's been gone for a while. Still, it's interesting to see out here the futures volume. Remember, OCC, primarily on the future side, what they clear is VIX futures. And so that was down 62.6%. So futures not exactly lighting up the tape out there in VIX land, which is a little bit interesting, a little bit surprising. On the earnings front, not a ton popping off this week. You had Dix and Zoom and CrowdStrike on Tuesday, Campbell Soup on Wednesday, and today you have Slack and Gap, Smuckers for those out there liking the jams and jellies, and Broadcom here. You can check out all those reports, earnings move results, and indeed the earnings season reports for yourself for free. You know where to go. TheOptionsInsider.com. Meanwhile, it's time for us to keep on going right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by TheOptionsInsider.com. It's time for the Odd Block.
All right, everybody. Welcome to the Odd Block, the portion of the show where things get wild, things get weird, things get crazy. Let's keep the theme alive. Let's keep using little trade alert fun. See, Henry in his infinite wisdom built out some cool, fun, custom things for us over the years here on this platform. And since they're probably going to go away for us, let's enjoy them now while we can here. Let's go out here. Let's unleash our Eye of Sauron first and see what they're finding out there. Let's see. First off, yes, as it might expect, given the fact of what we just broke down there in the top 10 out there, we're going to go to the airlines, and in particular, going to kick things off in American Airlines. Mr. Rock Lobster, it seems like someone is betting on a long-term return to normalcy out here in American. American, of course, ticker symbol AAL, trading right now $15.22. Actually, a good day for them. I guess they reported steady rise in demand for their services, and they're up 28% today. As a result, still down at a whopping $15, but they were 12 before this, so a good day for them out there. Let's see, a year ago they were trading a little bit higher. They were trading $29.12, so they're pretty much half of what they were a year ago. And they peaked out, looks like they topped out at nearly $34.99. That was on July 24th of last year. And then they kind of hovered at that level. They sold off a bit. They hovered from that level down to about the mid-20s and back and forth, and floated around 27 to 29 for the better part of the end of last year, all the way up until mid-February this year. They got to about 30.5, and then we all know what happened. And then they took it on the chin. They got down to 8.25 at their nadir. Looks like that was actually not in March, but in April, around April 3rd or so. So, yeah, not a good time. Actually, no, they got slower in May, actually. They got 9.25. So it looks like that low may have come actually in May. So very recent low up here. So obviously American looking quite good compared to what it was just about a month ago out here, like most of the market. But it seems like someone out there is betting on a size return to not just normalcy, but beyond where it was trading a year ago. So effectively, they're betting on American doubling, but they got a little time to do it because they're going out a little bit. In this case, they were gobbling up 16,000 of the Jan 2022 37 calls out here. Let's see, 16,042 to be precise, going up for $2.09. That's a penny off of the offer. If you're wondering, the offer was nearly $1 wide, so pretty wide as you might expect for 2022 calls. 37, that's a pretty optimistic strike. That's well beyond where they were trading a year and change ago. This is obviously opening, going up over there on the NAM, a.k.a. the NASDAQ options market. I won't even bore you with earnings because there are obviously many earnings cycles between now and January of 2022. But Mr. Rock Lobster, I think the narrative here is that someone thinks the worst is over. We saw not too long ago, the CEO of Boeing coming out and saying, we think one of these airlines is going to go belly up. Now it seems like perhaps the worm has turned. We have seen scattered anecdotal reports, people posting on social media and other places that, hey, these airplanes are much more full than I expected. So perhaps there's something to that. Obviously, these numbers we're talking about here, where they're reporting a steady rise in demand over there at American. Someone, Mr. Rock Lobster, thinking perhaps the bloom is back on the rose and giving himself a year and change for this bad boy to more than double, sir. What do you think of this one?
You look at it, right, and it's actually I guess how low was Air American? Well, it was $9, so it's doubled from the bottom. So it's up 100% from not 70% from the bottom. My only problem, I like the duration of the trade. My only problem is just buying that vol is just that $2 vol is extremely high. Like, it's crazy how expensive the vol is. I mean, I could see buying like the 20-30 spread.
He's ponying up for those calls.
Yeah, I mean, I could see buying the 20-30 call spread, something like that. But it's a pretty big chunk of change. Like, okay, I could see buying the 15-30, like, you can buy the 15-30 call spread for $4, in Jan 2021. You can buy the 20-30 for about $1.75. The idea of like the 16-30 doesn't look too bad for $3. So, instead of buying 1,000 shares, you buy 10 of those contracts for $2,700 instead of spending $15,000, and see what happens by the end of the year. I thought like people didn't want to fly because of COVID, or you had to take your temperature, or like what's amazing is how little information about flying is out there right now. Like what I'm seeing is the market is just pushing ahead. Vol has basically been pressing down, but as far as the news goes, I know there's the riots and everything have overshadowed everything, and it's kind of that tragedy is kind of ongoing, but where's all the COVID news about like how things are getting better if people are flying? Like, there's no anecdotal evidence anywhere except for Boeing was $130 last week and it's $185 now. So I mean, the market is betting with its feet, and and I think at this point people are just assuming the federal government is, they pumped enough money in to kind of keep things going, and then to see how the dust would clear. And of course, we're going to have to pay back basically all the money just people got. We're all going to have to pay back down the road at some point. So it's very. I'm not fading this rally at all. By the way, I think I thought we'd get through this COVID thing anyway and kind of get back to normal somewhat, but I think it's happening a little faster than a lot of people thought. So don't know how long it's going to last, but the trend is pretty solid on the upside for stocks. Although at this point, I think maybe we need to see some restaurants and people going back, and like some of the states ending their lockdowns. Like our state as an example, it's like ridiculous at this point. But I like the idea of the long-term long. I just think they are buying literally the most vol-sensitive contract they could find. Instead of kind of using that longer vol in their favor, like why not? You could sell the Jan 22 10 put for $4.50 right now. And then buy a 20 call for $4.90. Like you can do that risk reversal if you want, if you think the stock's going to 30. So there are other ways I think you could do it that might be a little better. So I'm not changing my tune on selling those out of the money puts for, find a ridiculous price and sell the put. But I think, they're buying the most vol sensitive contract they could find.
Yeah, this one's going to remind me. I mean, I put it in our to be watched, but it's going to be a long to be watching cycle. I guess we can, and we could try to come back to it down the road. But this is going to be reminiscent of the old Tesla puts. A lot of Vega baked into these bad boys, and we're going to see a lot of fluctuation. People are going to, as they were surprised with how those crappy far out of the money puts, how much they moved. They might be a little bit surprised. Maybe from an educational perspective, it might be interesting to watch these, and we'll see. Maybe our friend will take these. Who knows? We could be at that strike if this pace keeps up in a couple of months or a couple of weeks even. So we'll keep it up. But you're right. Folks are betting on this. People are apparently flying again. Where are they going? I don't know. You're right. We have no idea on viral spread or how it's working with the airlines. They're probably more diligent on these things than they ever were before, so that's probably a good sign. But still, not a lot is open. So where are folks going? But apparently they are going somewhere. Let's see. Maybe they're going to Vegas because it seems like the casino's opening back up out there, and that's where we find our next odd block victim out there. Yep, we're going out to MGM. MGM Resorts International is the effective ticker. Of course, they're in Vegas. They're also in other parts where there are casinos as well, but they're most well known for their iconic property out there in Vegas out there. Trading right now 21.5, up about 1.25, a little over 6%. This is the name has had an interesting year. A year ago, they were 25.64, so MGM not that far away from where it was trading about a year ago, and it kind of slowly, steadily drifted up. I mean, it felt the love from the market, but not quite as aggressive. As you would expect, it's kind of a sleepy stock for the most part. It peaked at about 34.64. That was in mid-January of last year. Sold off a bit then down to about 30. Then it kind of rallied again up to about 33 and change. It looks like it was pretty good in the middle of February. Then we all know what happened after that. It sold off pretty hard. Got down to about $7.14. Actually, intraday looks like it got even lower. It got down to $5.90 at one point in the height of the madness there on March 18th. And then it kind of slowly rebounded. So it's up from that level. It's up over 3x from that intraday low there, which is impressive. It was up pretty much 2x almost instantly. By the 26th of March, this thing was trading $13.45, so more than 2x from that $5.90 low up there just in the span of a week and change out there. So interesting times out here in the casino space, and now we're seeing, again, they're opening up again, so getting a little bit of love. And Mr. Rock Lobster, we're kind of 2 for 2 here. We have a similar play out here. Maybe the same guy is playing on both of these because the size and the term are both eerily similar. They own up at similar times, too, about 20 minutes apart. So maybe someone playing in the rebound of two sectors. Wouldn't be surprising. Some funds betting on the rebirth of certain segments of the economy. Maybe this is their play. Either way, they're picking up 10,119 of the Jan 2022. Yet again, 40 calls this time. So they expect this one to pretty much double over the span of the next year and change out here. And they paid a similar premium level as well, Mr. Rock Lobster. The other guy paid $209 for the Jan 37s, 2022 37s in American Airlines. This guy paid $208 for the Jan 40s. This is starting to look like more than a coincidence, Mr. Rock Lobster. Everything is kind of lining up here. This one went up on the Philly this time. These things were $1.80, at $2.11. So a little bit tighter here for these MGM calls out here. This guy not exactly lifting the offer. He got a whopping 3 cents to pick up 10,000 of these bad boys. Let's see how many of these have total traded on the day out here. Total of 12,300 on the day. So a couple thousand more piling in after the fact. So interesting stuff out here. Mr. Rock Lobster, two very similar trades and two names that are perhaps poised for a bit of a rebound here. What's your thoughts, A, on this very eerily similar trade here in MGM? Do you think perhaps the same player at work?
I think it could very well be the same player at work because the same player is not, reading the Vol textbook. So, I'm all for, I think all these things are going to rebound, and I think in a year from now, a year and a half from now, they'll be back to where they were at least. Although this is a more aggressive call for sure. But, vol per contract on that trade is pretty darn high. I'm just looking at it on live vol right now since the CBO's just buying everything options. So, that means that you're up next. You're going to be the only option platform standing. I don't know
if they show much interest in media firms yet. But, in the analytics firms, they certainly have pretty much gobbled up most of them. Our buddy, Mr. Matt, over there, in fact, I already emailed him to tease him, saying you're next on the chopping block. He does something a little bit different than FT and what Henry does. They were more very much on the data analytics side. He's more on, back testing and things. But still, there's not many players left in the options data space.
No, they're all just being gobbled up. So Vega per contract is 10 cents. So that's a pretty fair piece. So 10-point drop in volatility means that contract drops $1. So just having vol get to somewhat back to normal means that contract is going to lose $1 right off the bat. So their $2 can go to $1. So you would need a pretty substantial kick in the underlying price to make that pay. So there is a point on some of these out-of-money contracts, where vol is actually almost got a higher delta than the actual delta of the option does. And so you got to be kind of careful on that. So I like the idea of going long-term. I think a call spread, like bang for the buck style, would probably be a little better because that's less vol sensitive. But yeah, I think these are all, I think the country's going to come back and the economy will come back, and because historically it seems to do that. But I just think I would rather just sell puts in these names and then go take the money and buy some call spreads with it. That would be me.
Hard to blame you. I'll tell you what, I'm going to put both of these in our to-be-watched category. Even though it's going to take a while to come back to them. But who knows? The way this market is moving, these could both be closed and very happy campers in the span of a couple of weeks out here. So we'll keep an eye on both of these because they are eerily similar. Premium-wise, duration-wise, size-wise. The only thing that's really different is the name. But other than that, they are eerily similar, even the time of execution. So perhaps a fund doing a little bit of what they feel is bottom feeding in some of these names that have been pretty beaten up of late. All right, let's go wrap up with our final name out here. Well, actually, we're getting a little bit, we've been running on a little bit. So really quickly, Neo calls. There's another one that's on our top 10 out there, very active. Someone looks like gobbling up the June 7/2. These were through the offer. These were offered 28 cents at 30. They picked them up for 32 cents, about 5,000 times. These are June of this year, so a little bit closer to home. Let's keep an eye on these as well, and then let's get some of the folks on here as well with a little bit of your mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody. Welcome to the mail block portion of the show where you guys take the reins. You guys have been firing off your comments as well. Let's get out there. A bunch of you were chiming in last week I think Mr. Uncle Mike and I think the Meatball were going on about SLV maybe making it to 20 for everything is said and done. A lot of our listeners chimed in about that, including a frequent listener, frequent commenter, Mr. Mark Brandt. He said his calendar straddles will love it. So he had calendar straddles in SLV. I'm not sure what that means. That means you have a straddle in each month? Do you have a leg in each month? What do you mean by a calendar straddle? Let us know. It's a lot of different ways to take that. We also had Ted Fortherman. Ted Fortherman. Maybe he's for the men. Either way, Ted Fortherman, we were chiming in about talking about something about Walmart. A lot of these big firms saying they're going to allow their companies to remote work even after all this madness is over. And he chimed in saying, so this really is the new normal. Remote working, yeah, seems like it is, Ted. And everyone else out there, National Guard troops on the front, everyone beaming in. This is just the world we live in now. Valerie out on YouTube commenting on our last show, episode 905, The Market Rallies While the World Burns. They just chimed in and said they loved it. Well, glad you liked it, Valerie and everyone else out there. A lot of you liking it on the YouTube these days, so we'll keep putting it out there for you. It doesn't really cost us anything. It's just a pain if you know anything about YouTube. Their copyright restrictions are onerous and just ridiculous. No other platform do we have to deal with this. So for the handful of you who like it on YouTube, it's an extra effort because we have to deal with all the copyright complaints all the time for all the music we use, which is all fully legally licensed, yet we have to prove it to YouTube every single time we upload a show. So that's a little bit annoying and onerous. So YouTube needs to fix that. But other than that, once we prove it once, that should be enough. But hey, we're willing to do it for you guys and gals like Valerie and everyone else out there who's liking it out here. WinSmart CFA chiming in. We were talking on the last show about whether this can really continue, this rally. We're in crazy, unprecedented times, and yet the market is just pushing it all aside in its ever-increasing desire to surge higher out there. And he chimed in, this WinSmart CFA, with a graph of high-yield defaults. He says in January to April of last year, the number of defaults were 7, and they totaled about 7, almost 8 billion total in the value of the defaults. This year so far, from January to April, is pretty much double. It's 14, and the value is almost 3x. It's about 23.8 billion out there in terms of a lot of them coming in the energy sector, 8 of them in the energy sector, and then 2 of them in media, 1 in basic industry, whatever that is, and then telecom and transportation each having 1 as well, and 1 in healthcare out there. So double the number of defaults in high yield land if you're interested in such things. All right, I guess we have time for this. This is an epic one. From Peter from Germany. I love our international listeners. We love all of you out there. We know we have a pretty broad reach throughout not just the U.S., but into Western Europe and into Asia and other places as well. We love to hear from you guys, too. I'm glad Pete from Germany chimed in here. Dear Option Block Expert Crew, for a long time, I'm silently but gratefully listening to your show, giving me insights into options and their trading. Thank you very much for that. Well, you're welcome, Peter, and everyone else out there who's listening and enjoying overseas. We love all you guys, too. Hopefully you guys are mostly insulated from this madness that is going on over here. But now I'm having a question that bugs me. Just before USO and derivatives were deemed, easier for me to say, not appropriate for retail investors, and he puts in parentheses, and shortly before the 8-to-1 reverse split, I opened a long call position with the 2.5 strike. So far, so good. He puts in parentheses, unfortunately being unable to do my usual up and out with bear call spreads due to the aforementioned retail restrictions. But hey, so be it. He writes, then came the 8-to-1 reverse split, making the simple me thinking, oh, now the strike will be 8 times 2.5, being 20. But only 1/8 of the contract's shares positions. But interestingly, in my brokerage account, the parameters of my position didn't change. Still the same amount of contracts with 100 shares each, and a 2.5 strike, and still quotes. So far, so good. But now something struck me. The ask price my broker shows me is not only below the ask of the new 20 strike contract divided by 8, but often times below the supposed intrinsic, in all caps, intrinsic value of that call, being the actual price minus 20 and the result divided by 8. Not to speak of the bid prices, which are even worse. Thus, my question to you, why were the contracts, or at least the max amount of contracts, dividable by 8 to get one, quote, new 20 strike contract not adapted? More interesting, why do the prices of the 2.5 call contract and the prices of the 20 call contract differ by that much? Thank you very much for your kind help in advance and keep up the good work. Best regards, Pete from Germany. Well, this is interesting. You know, I had some USO options I was trading around all that time in that split, and I did not note the stark differential that he is quoting here. Mr. Rock Lobster, did you or any of your crazies, were they slinging any USO, and did you notice any of these crazy differentials that Pete from Germany noticed here?
My biggest thing is, what platform is he using? Because I think the way certain platforms might look at this might be a little strange. You can go to the OCC and actually if you go to the OCC website and do the search bar for USO, you can get the exact contract spec change for USO. So at least you get your answer that way. You've got, I think part of the problem is the liquidity dried up. We basically told everybody to get out of everything. And it's mostly because of a gamma issue. Your gamma goes away when they do the reverse split because the multiplier does change. I don't know I don't know how you could have the same multiplier. They have the same multiplier in the contract. They're doing something funky with how they're reporting the prices. So I need to go look at that, to be honest, to see what it is, because it does sound odd to me. Because normally you would have a change in multiplier and a change in strike when you have the reverse split. So
yeah, this one made me curious as well. This is not something I noticed. Again, we use a bunch of different brokerage accounts here because we kind of have to keep an eye on what's going on out there. And I don't remember which account we traded the USO in, but I do not recall seeing this very straight. This sounds, I'm kind of with the Rock Lobster on this, Pete. This sounds like it may be a weird issue with your broker. Let us in. We won't share it on the air. We don't have to, but let us know what broker you were using, because I wouldn't mind checking this out for myself, because the ones we used, and I won't name them, I did not recall any funkiness with the strikes or the multipliers or anything that seemed strange out there, pre or post split out there. So this might be, maybe you're using an international broker. Maybe that's the issue. Sometimes brokers are more or less savvy when it comes to options. Sometimes these funky adjustments can throw a wrench in the works for them. So let us know who you're using. I'm very curious. This sounds like it might be a brokerage related issue. But I'm going to do a little digging after the show myself and see if I can come up with any fun nuggets for you out there. Thanks for listening, everyone else who's out there internationally. We like to hear the international flavor here on the show. We love our U.S. audience, but your international folks, you're trading the options too. We want to hear what you're up to and what you're slinging in the crazy times we're living in right now. As we keep on rolling to our final segment, it is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block, the portion of the show where we go around the block and tell you what we're watching. Mr. Uncle Mike, you've had a nice rest. I would never dare invoke you on a USO when I know how much you love USO out there. You're already dealing with your XLE issues out there. So, Mr. Uncle Mike, sir, what are you watching for the rest of this week into the weekend?
Well, definitely watching the 3,100 level, watching to see if we have any more rioting or anything like that going on as well. And then I think one of the main things that we really need to keep an eye on as well is the 200-day moving average of the SPX, in that we have broken it. However, it's one of those things to where it's it continues to be right around that 3,000 level. And so with that, I think that we really need to respect that, because that is one of those technical indicators that people do look at. 100 points is nothing in a market like this. I know the market's kind of felt a little bit boring lately, but 100 points is still nothing to these markets. And I would encourage everyone to keep a close eye on it and have a safe weekend, everybody.
Indeed. Mr. Rock Lobster, same question for you. As you're watching through your spyglass, the Clam privateers, what is on your radar until vol views tomorrow, which is looking pretty good for you, spoiler, as well as into the weekend?
So it really is if all of this holds up. I mean, this literally, everything that's rallying is past COVID-19. There was, Spain had no deaths from the disease today. So we have some European people in Pro Chat where things back there have been getting much better. And the reports have also the virus, the strain of it is less severe.
Maybe you got Pete. Maybe you got Pete from Germany in the chat. You should go check. See if Pete's listening.
So those things, they're reflecting the fact that like the Amazons and Apples have kind of stopped moving up today, but people are buying everything else, which is that's kind of a drum market has been beating for a couple of weeks now. Like, all of the big tech stocks have kind of rallied back to their highs. And like, where are they going to go at this point? And then all the other Main Street type stocks, are hopefully coming back from the dead. So that's what the pricing looks like today, and I expect more of that to continue, to be honest.
Unfortunately, that music means this show will not continue. But you know what? Our broadcast day will. So if you need a little bit more in your ear holes to walk you off the ledge, maybe you're eyeing the Clam privateers or the National Guardsmen or whatever else outside your door eerily as well, and you're perhaps a little on edge, don't worry. We'll keep some content heading your way. If you're listening live, you get some fun stuff in the chat, and we'll be back in exactly half an hour to talk all things futures options on TWIFO. We're going to finally got some folks from CME joining me on the show today. We're going to break down all the micro futures. What the hell's going on with the crazy explosion they're seeing in crypto derivatives out there, and as well as a bunch more going on. Equities are moving, so we're going to talk some of those as well, and probably WTI. A bunch of fun stuff, maybe some metals. You never know what's going to make it on the show every week. You got to tune in to find out. Before we do that, let's go around the horn again. Let's start with the land of Uncle Mike, sir. While you're awaiting your peaceful protest out there in St. Charles, if folks want to reach out to you, maybe they want someone to just talk them off the ledge these days, where should they go? What should they do?
stcharleswealth.com. Check out our website or call me directly at 630-885-0017. We'd love to have a conversation with anyone who is interested in a financial advisor who is not afraid of the option product.
There you go. He's not afraid. stcharleswealth.com, the place to go. And the Rock Lobster also not afraid, unless you're talking about clam pirates or privateers as they are known now. Mr. Rock Lobster, folks want to hit you up. Where should they go?
Optionpit.com. Look at our products and results for 2020. They're all doing great. That's all I can say. Our students are happy. And I think we had a pretty good year. So anyway, optionpit.com. Look at our Trading Legion if you want to learn how to trade. Sharp Bets if you want trade ideas. Also the Vol Edge, the Vol Trading Club for vol trading ideas and education. So we do it here. We have a lot of happy people, and we're making people money. So those are all good things. So check us out.
You had a good year, and it's only beginning of June, listeners. Imagine what you can do in the second half of the year. Find out for yourselves. Optionpit.com. Join the Legion. Join the Fun Vol Trading Club. Join the Pit Chat, as we cool kids like to call it. And all the other cool stuff there. Optionpit.com is the place to begin your journey. And on behalf of Mr. Rock Lobster and, of course, the Uncleist of Mike's and our friends over there in TradeStation Land, TradeStation.com/optionsinsider, place to go to begin your journey over there. And we'll see you back here in about half an hour for TWIFO. And then we'll see you back here again tomorrow for Vol Views, and we kick it all off again on Monday with more of the Option Block.
The Option Block is brought to you by TradeStation. TradeStation has been giving options traders an edge for over 20 years. Their suite of simple yet powerful analysis tools and lightning-fast order execution can be accessed as an app on your phone, web browser, or computer. Education is in TradeStation's DNA, offering help for traders of all levels. And now, TradeStation is commission-free for equities and options trades. For more information, visit tradestation.com/optionsinsider. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.